Hello, everyone, and welcome. This is Kevin. We start in seven minutes. The topic today, chart analysis. You see Melissa Armo there, sponsored by the Stock Swoosh LLC. We'll be starting promptly in now just 6 minutes. Start time in 6 minutes. Thank you, everyone, again, and welcome. Everyone, and welcome. Start in just 2 minutes. 2 minutes start time. Thank you, and welcome, everyone. Hello, everyone, again, and welcome to the new folks that just joined us. You're in the right place at the right time for the presentation today featuring Melissa Armo with the Stock Swoosh. We'll be starting promptly at officially 5:30 Eastern Time, or 1 minute from now. We do want to thank each and every one of you. Again, you're in the Online Trader Central room for Melissa Armo, and the presentation starts now. So let me see if I can round up the percussion section. Drummers, are you ready? Okay, please cue the trumpets. And with that, ladies and gentlemen, please put your hands together and welcome our host and presenter from the Stock Swoosh. Please welcome Melissa Armo.
Hello there, everyone. Welcome. Thank you so much, Kevin, for that nice introduction. Thank you, Online Trader Central. So nice to be here. I love doing webinars with online traders. So welcome. Today's topic is called chart analysis. Should be an interesting little lesson today. And for those of you that do not know me, my name is Melissa Armo, and I own a company called the Stock Swoosh LLC. If you'd like more information, you can go to my website at thestockswoosh.com or email me at melissa@thestockswoosh.com for more information after today's lecture. So let's get right into it, because I have a lot to talk about today. I have a lot of charts in this lecture for the purposes of teaching today. So really what I want to start with, though, is how it is important to get to a point when you recognize how earning money versus having money is actually more important. I think in today's economy, in today's world, the way things are, people kind of have lost sight of that. Why? Because when the economy took a dive with everything that happened with the banking institutions back in 2007, 2008, 2009, people then all of a sudden, and this is not just people, but this is companies too, you know, they all kind of hoarded their money, okay, because they thought, gosh, you know, credit was thin, and then people wanted to have, they wanted to hold on, they wanted to squeeze their money. But, you know, the one thing that trading has realized, I've realized about trading, is that actually, now that I know how to trade and do what I teach, I have so much power in what's called earning power. It's the power of the fact that I can earn this money, okay? So if somebody gave me a choice and they said, what do you want to do? I could give you $100,000, or I can teach you how to earn $100,000. Which choice would you take? Well, you should take the choice two. Learn how to earn $100,000, because if you can earn $100,000, you can earn $200,000. If you can earn $200,000, you can earn $300,000, and so on and so forth. If someone gave you $100,000, after you spend it, it's gone. So there is power in understanding how to earn money in today's economy, and I think it's very powerful, and it's something that people are not thinking about. And yet that is exactly what you must think about if you want to be a successful trader. The focus has to be on earning, not having. Because if you learn how to earn it, the sky's going to be the limit for you. And you're going to be, you know, blowing everybody else in the dust. So everything we're going to talk about today is going to focus around this, on how to earn money, how to have the earning power and that power behind you. And it's in the charts. Charts are the pathway to the money in the market. This is the way to do it. So, you know, I started out when I was doing this, I said, you know what, ask yourself, what's your chart reading IQ? If someone asked you a question, what would you say? You know, would you be on the low end? Would you be on the high end? Would you be somewhere in middle? If I made up a test and actually tested people that took my class on a regular basis, or brand new people, I've thought about doing this, I may start implementing this. It actually would be something that I don't think anyone else is doing. I would test people's knowledge to see what they know and the progress that they're making. I want you to think about that. Think about that within yourself. What actually is your chart reading IQ right now, today, this second? Because chart analysis is really its own language. It's something you have to study and get good at. It's not something that you could pick up a book, or even 2 books or 3 books, or learn even in one 1-hour webinar. Now, I'm going to show you some things today, but it's still not going to be everything that you could learn in my class, because really chart reading is its own language. Have you ever wondered why some traders do so well? I'm sure you have if you're trading. How do they see the move in a stock before it happens so clearly? You know, almost like they're forecasting what it's going to do, like a psychic. Well, they do this because they're masters of chart analysis. And reading charts and the movement of price in a detailed manner is absolutely a skill. And the thing about gaining skill is what? You gain skill by learning and doing. It's the learning and the doing and the layering of the learning and the doing. This is how you get skillful at something. And really, trading is a skill. Reading charts is a skill, and getting good at becoming a trader is a skill. It's a skill, and this is why some people just give up. They think it's something that you go at like a job. You do this, boop, that's it. No, it's a skill, and it's a skill that's something that you're going to do your whole life, and you're going to keep getting better over time. I see this within myself. Analyzing charts correctly is what sets successful traders apart from the rest. And how can you gain this expertise? How can you use charts to your advantage to profit in the market? You learn from a trader. You learn from someone else that's doing it. You learn from a trader who has a high aptitude for chart analysis by focusing on the detail. You can read books, but you're better learning from someone, taking a class, actually learning from a person you can ask questions to, because the detail leads to the accuracy, and you've got to learn what to look for. So we all see the same thing, or do we? We don't. We don't. I mean, we do, but we don't. Okay? When I look at a chart and you see a chart, we see the same chart, but do we all see the same thing, or do we? We don't. We do not. Okay? This is how some people are doing it so well and others can't get it. Okay, we see the same thing. If you lined it up in a row and you put the same chart of the market or any stock together, we would see the same chart, but we wouldn't see the same thing. Okay, this is the magic in the market. It's in this kind of detail and precision in the reading of it. And if you're focused on reading charts and the analysis of them for accuracy, you'll get better results. I mean, this sounds so basic, but it's true. You've got to be more detailed in what you do and trade with precision. And this focus will translate into successful results and profitable results. Successful results grow on top of each other. They snowball in a way that benefits you with the money and also your confidence, because your confidence grows with the results. Your conviction grows with the results. And I can't tell you that how important that is. And in fact, it's just as important as the money, if not more. Because when you're starting out at the beginning, when you're learning something new, having the confidence and having the conviction is so important for you to keep going. Focusing on one quality system in play will make an important impact on your trading. This is what I use. Some of you know this already. Those of you that are new to what I do, I use a 26-point checklist. This is what tells you what to look for. And what I'm looking for is stuff that's happening in the daily chart of the stock and the price. That's really what it is. That's how I created this whole thing. So this is where the detail comes into play. The detail is I'm looking at 26 things in the chart. Chart analysis is a science. So you have to know what to look for. You have to learn it. You have to learn what to look for, like looking through a scientific instrument, but except for it's your eyes. Okay, and it's your eyes, a combination of your eyes and your brain working together. And really what chart analysis is technical analysis. Charts are full of price patterns and historical data that is at your fingertips to study and use to make money. A high degree of focus and skillfulness in chart comprehension is required to consistently profit. It's not that people can't make money trading without this, but they will not be consistent without this. And you need to be consistent in order to do this for the living. Or it's just not worth it. Okay, the consistency has to be there. That's a big part of it. If you become an expert in chart analysis, you're going to have an edge. Why? Because this is how you're going to do it. This is exactly what you're going to need and what it's going to take for you to make it. There is no magic indicator that's going to do it for you. No thing you can buy, no computer program, no black box, no nothing. You're going to have to learn it. You're going to have to learn it. You're going to have to learn how to read charts, and you're going to have to read the information for yourself with your brain. I'd love to sit here and tell you that I could create some kind of magic indicator or a program, a black box for you to just boop, press the button and do it. But it's not that way. You actually have to learn it. That's where the skill comes into play and where you use the information that's your own blessed information that's you, that's in your mind. What to look for, how to study it. The Golden Gap system, which is what I do, looks at 26 different points in a daily chart in order to determine the direction a stock will make on the day. So you can play it in that direction, whether it's a long and a short. I prefer shorts. The class also educates traders on how to read resistance and support on an advanced level, and we're going to talk about this today. The good news is that a fortune can be made in the market if you become an accomplished chart reader, and this is true. And for some people, as a regular person sitting at home with a computer, To make over 6 figures as a trader, when you just are starting out, that's a fortune when you only work an hour a day if you have a small account. That is a fortune. So think what you could do as time goes on with that. You've got to learn what to focus on. So what? What are you going to focus on? You're going to focus on the price. Number one, you're going to focus on the flow of the price action. The flow of the price action. And we're going to talk about that today. Focus on what the price is telling you in real time, because that's when you're taking the trade. That's what matters right now, when you get in. Use the prior data. You're going to use that information. This is where the skill set is required to read the overall current long-term trend of the price, so you know that the trade that you're getting in is going in the right direction. And you're going to read the event in the strategy you're doing to determine if the price is reacting in a way that you can trade it to get a move to profit, because this is all about trading to get a move in something down or up so that you can make money profiting. So this is a trade. This is a gap that just happened on Friday. This was Oracle. The interesting thing is that this gap that happened on Friday did something that I never saw in my life happen before in this way. And so I thought I'd use this as one of the examples today to talk about, because I even learned something to enhance my own skill set Friday in real time in the moment, and then going back and analyzing what happened here. Now, I like this gap, and I liked it as a short on Friday. This is Oracle. Here's a daily chart. Let's look at this first, actually, before I show you the 1 minute. So Oracle had this kind of move down right before the gap, and the market fell in these days too, and Oracle's a market stock. Now, they had earnings. It was Thursday night, and then Oracle opened and gap down here. It was a great gap, but the fact is that a lot went on here right before this. I was watching the pre-market trading. There was almost 5 million people in it before the market opened. So I expected, as I usually do, some people to get out of it right into the open, which could happen in the first 1 minute, could happen in the first 5 minutes, could happen in the first 15 minutes. Now, the target on the day for this was here. It didn't get there. And actually, it did not get there even still today. This is the next target. This is going, it's 29.50 right down here, this little cushion in here. But it worked unexpectedly well the day of the gap because of this, and I'm going to show you what happened. This is the 1 minute chart, okay? Oracle opened at 9:30, and this is, I'm going to tell you what I never saw happen before. There was over 13 million people in this one 60-second bar. I never saw that in my life. And I've seen more 1 minute charts than anybody I know, anybody in this room, any person I've come in contact with that I've read, because I read these 1 minute charts and have for the last 5 years. And I've never in my life seen anything like this. So when I went back and studied it, I realized what happened. And in the moment, I watched it and I spoke out loud and said in the trading room, I never saw anything like this in my life. But I still like the gap. When this held, this went 1 penny over the high. This is actually went 1 penny over the high. The high here was 30.83. This is 30.84. It went 1 penny over the high. So this closed here. Then it opened and went up 1 penny over here, and immediately, boom, went right down again. So this was confirmation, actually, who was in control, which I already knew was the people in the gap, which was the bearish side, which was to the downside. It was a short. But the way this happened, I never saw in my life, which was what? Here. So I'm going to describe it. So there's one thing you're going to look at, which is the price. What's going on with the price? They're not letting the price go over this area. And it actually held 31, which is a whole number. And it could have gone up to 31. I had the resistance over here, and it was a little bit above it. They weren't letting the price go over here. Who is they? The power money people that were controlling the gap, that were selling it off. Okay, and that's all you care about because you're a trader. So anyways, this happened here, and in this jerky action, the stock opened and went down 20-some cents. Red, this was red real time, flipped and went green and held it in a teeny weeny little teeny green head here. And that's it. This stock was so weak that 13 million shares went off here. And that was all that it did. So this was hard and fast to move this thing down. This is actually confirming the weakness. So the price was confirming the weakness, and also what? The flow of the price. The flow of the price action. So it was two things, the price and the flow of the price action. And of course the strategy, which is the gap. Okay, which is what I trade. But this is the kind of thing you have to look at. And in real time, I saw the volume that was in this thing. And you can see it here in this bar, actually. I've never seen anything like that in my life. All right, and I've been trading for 5 years on 1-minute charts. So this is the kind of thing that enables you to trade and take this stock short it all in the day, regardless of what the market's doing, even though the market went red on Friday. And even though this was a sizable gap down, that it was basically going to hold the high of the day there, that it wasn't going to go over 30.84, and it didn't. So, you know, think about the time it takes to learn this stuff. I know people say, gosh, you know, I have to do a class, I have to trade, I have to learn the skill. Could you wait 10 years to become a millionaire? Like, is that too long? Now, I'm just putting a number out there. It might be 5, it might be 8. I don't know how much money you have to start with. But I'm just saying, as a regular person, could you wait 10 years to become a millionaire? Could you say, you know what, I'm going to take this class, I'm going to trade every day, I'm going to keep my other job. I'm going to keep my part-time job, I'm going to trade every morning for an hour and a half or 2 hours. I'm going to learn this stuff, I'm going to take the class, I'm going to do it. What if it took you 10 years to become a millionaire? I don't care if you're 20, 30, 40, 50, 65 years old. If it took you 10 years to become a millionaire sitting in front of your house, in your computer, in front of your desk for 2 hours a day, is that too much? Like, is that beyond comprehension that you couldn't possibly even put forth that effort? It's not. This is great. 10 years to become a millionaire trading? 10 years. Some people work the whole life, can't even see a nickel like this. And the market can give this to you if you learn how to do this. And 10 years is actually realistic and actually somewhat conservative, but very realistic for someone to start out doing this, that you could do it. You could do it. You could do it. Okay? So you start from scratch and you learn something good. In 10 years, you can do it. Now, if you've already been doing this for a period of time and you don't know it, I'm talking about starting from scratch. But if you start from scratch and learn how to do this stuff, you can do it. And 10 years is a sneeze in the bucket of a lifetime of any human being. But you've got to start somewhere. Everyone wants instant things, instant answers. This is a learned skill. This is something that is so far greater, because the potential exists to actually get to this level, that you have to understand and be patient with yourself, that you've got to learn it. And there has to be a certain level of commitment. You're not going to become a millionaire by yourself, sitting at home with an account, learning this stuff without some level of commitment. And the commitment comes from you. And all you have to do is make it. Because the fact is that traders who make millions of dollars are masters of reading charts. They absolutely are. They're masters at it. They've got the skill. It's about becoming a professional with the right knowledge. You don't have to, you could be a professional from your house. You don't have to be a professional that goes into an office every day. You can actually be a professional sitting at home. I'm a professional. I'm actually running a business from my house. I run a business from my house. I trade from my house. I'm doing it all from my house, and so can you. Okay? So this is about being a professional. The professionalism is your own integrity with what you're doing, your level of commitment, your focus on what you're doing. So ultimately, knowledge, it makes a big difference. If you're one individual trading in the market, there is only one way for you to become successful. You will need the right knowledge base, and you can't deviate from it either. The right knowledge will allow you to make a lot of money trading, even as one person. And you don't need a lot of money to make a lot of money if you have good risk-reward trades. And we're going to talk about this today too. You do need a lot of knowledge though, and this is what you have to build on over time. One major difference between a so-so trader and a great trader is that great traders are absolute masters at this technical analysis thing, which is an overused term, but it is, on point. And if you do not know how to read charts in a sophisticated manner, then you've absolutely got to learn. So look at it as something that's exciting. Okay, look at it as something that's exciting to you. It's like venturing on into traveling to a different country, learning a new language. It's fun, it's exciting. Yeah, it's going to take you work to get there. You've got to get on the boat, you got to cross the river. It's going to take you a couple hours to get to the new place, but it's exciting, it's adventurous. And it's exciting, why? Because you're going to make more money when you learn how to do it. So, but let's go over some examples here today. I'm starting out with this guy here. He's an advanced trader. He has special glasses that he uses to look at this stuff. He puts them on every day. This helps him see these charts so well. Now, last week, there was a gap I looked at on Thursday. This was EBIX. This was a nice gap. There was some kind of news or something on it. I don't remember. It wasn't an earnings gap, but it was a nice gap, okay? Looked at it this day. Didn't set up right in the morning, which is when I typically like to trade. However, it did set right up right in the afternoon as a short. Now, what did this do? This is Thursday the 20th. The stock opened and rallied. And again, this is a huge gap down. Could it have gone right away? Yes. Did it? No. It could have. It might have. It didn't. That's fine. You watch it. You either take the trade and take the stop, which is exactly what I did on it, actually, and you watch it to set up. Now, if I'd stuck with this thing, I would have retaken it. But I laid off of it and watched it the next day. But here it is. It rallied up the first day to, guess what? $12.45. It's in the bottom of this tail. Now, we've talked about this before. These tails is like a string in a balloon. So pretend this is a balloon and this is a string. This rallied up into the bottom of the string. Big whoop-de-doo. It didn't matter, okay? This didn't do anything here to make this not continuing the next day, which is when it did. Typically, if they don't work right the first day, they go the next day, which is why I watch these things and it's continuation gaps. So this rallied up into a string. It did not matter. And guess what? Held 1250. Held 1250. Okay. Now, what did it do the next day? I have here all the information for what this did. Okay, this is the 20th. Okay, this is the gap failure. I'm showing you this stuff. How I knew this was going to continue when I looked at it Friday. Do you see how this traded down in here? This is all going on. This is on the day of the 20th. Now it comes up to here. Do you see this? And guess what? It held. Do you see that? This is in the middle of the day. This was in the morning. And in fact, it was the first bar of the day. So the stock got down and open here. Traded down on through. This is pre-market. Failed as an immediate short unless you took the trade off quick. If you took the trade off quick, you got paid. I typically follow stuff to target. Anyways, flipped on through, made a new high, so you can't go back into it unless it shakes out or settles down or wait and trade late. It did set up, though, before lunch again. How would you have known? Look. So even still, if you don't go back in, you use this information to tell you what? That the stock made its own resistance here this day of the gap. So it ran up into the bottom of the string and retested resistance on the day, and it held. So that's it. That's it. So you look for it as a follow through when? The next day. So here it is. So this opened and ran up here to 1155. Here it is over here. This is the day of the gap of the 21st, the day after. Now, what's this? What does this tell you? Does this anything? So this is all the 20th. This is all what's going on here in the 20th. It didn't work as a short in the morning of the 20th. You could have traded it late into the lunchtime period. It was a nice short with a nice move, actually, okay, that you got down. I mean, if you took this in here under 12, this is a run down into 2 o'clock. I mean, you actually got $1.50 out of it into the lunchtime period. But let's say you didn't do that, and you watched it for the next day as a continuation gap. This is 9:30 on a 5-minute. This is 9:35. The stock opens and goes up here to an exact number and sets up. I mean, you could have aggressively done it in here, except for the quality trade is to wait to this, and I'm going to show you in a minute. Where is this number? Take it across, take it across, take it across. This is the number exactly. This is the rally up here when it flipped over the day of the initial gap. It's the exact number. And right after, at a reversal time, the day after, it couldn't get over it, and it dropped. And by the way, these are areas. So again, 1155 is a number, but these are areas. 1150 is a number. And it was no way going to get over 12. The fall on, the hard fall fast came when it crushed under here. I think it was like 985 or something. When it hit under here, this was a goner. Okay, and that's when it did this big full-on move. But it started up here. So you want to get the trade up here to see exactly what is happening initially. All right. So here's the 1 minute where you shows where the drop off is. Where actually the drop off started happening under 10. When it ran under 10, then it was, and that's when it hit under the bar from the low of the 20th. Then right under there. So again, you're reading what's happening in the price. As soon as it goes through the bar from the prior day, the day of the gap, the day that it should have worked, it could have worked, it didn't work. Does it matter? No. It's still a nice gap. and then you look for follow through the next day. So here's the 5 minute. Here's the 5 minute entry on this one. It was right in here. This is if you're waiting for the confirmation, okay? And the reversal time here, which is around the 10 o'clock period. So their entry time is 10:10. Price was 10.87. Stops over 11.02. It was a risk of 15 cents. And if you risk $375, for example, the total profit was over 16 times the amount you risked. Target was 837. I'm going to show you where I got that in a minute too. Again, the price. So total profit on this trade, risking $375, would it be $62.50? Once again, this is the difference. This is not a so-so trader here. This is an advanced trader. Why? This is an advanced trader who can take a risk of whatever amount and turn it into 16 times. That's a quality trade. That's a quality trade. That's a quality risk. The only BP you needed to do this trade was 27,000 something plus. And I wanted to add this into the webinar today because people have been asking me about buying power. And the fact is, you don't need $1 million buying power to do this strategy. Now, there was an ad on this if you did it. The ad was with the market because the market was falling on through and dropping and setting up here on a sell setup at 10:45, which you knew because the market short was already underway that was going to continue at least till lunch. So with the market, this trade set up here, and you could have done an ad at the reversal time here. In this case, if you do it, you lower the stop. Why are you doing this? If you know it at least has the target. Potential target was 8. As it turns out, it didn't get there. But the risk to reward was there even with the ad on this trade. The ad was time was 10:48. Price was 9:57. Your cost averaging your pricing from the original one, okay? Doubling your size. So no matter what, even if this trade fails because you're lowering your stop, you make $1,850. So if this trade fails with the ad, you make $1,800, okay? And if it goes under work, guess what? You make 24 times the amount you risk, over $9,000. And how much did you originally risk? How much did you originally risk? $375. $375, and you can make almost $10,000. The BP needed is what? 51,000. That's it. That's it. That's not even 100,000 BP account. That's it. And by the way, this is how you're going to take a dinky account and turn it into a bigger account. This is how you can do it, okay? You have to know what to do, but this is how you do it. Once again, knowledge can take you everywhere. The knowledge and skill you have that you can gain from this stuff can take you everywhere you want to go. You don't even need the money to bankroll you at the beginning in some huge, crazy way because you can do it with skill. So the target, you know, was really could have gone to $8. But here's where it went. Down in here. Right in here. Let's go back and look at it. Here's the 1 minute. You see this leveling off? This is right in here. This is a 50 period moving average in here. All the way back. All the way back. I went back a long time here to find this. Okay, but that's where it is. Do you see this? It went in, sat right in here. Leveled off in here and then bounced. No, the BP, I'm just giving you the total buying power you need. Buying power is not the same thing as margin. Chuck's asked me a good question. Let me quick answer this first. The buying power is the buying power you have in the account, not the cash value you need. So, for example, okay, if you want to trade at a retail brokerage house where you are required to put up $25,000, that initial requirement of the $25,000 at a retail brokerage house means your BP is 100. That's the 4-to-1. But if you go to proprietary day trading firm, they have, depending on where you go, they have different levels of BP according to your account and deposit size. You have to check with the broker directly for that, okay? And this is not 51,000 in cash, it's the BP. So in this case here, all right, for a retail account, you got to have 25 to open it. So you're going to have 100 out of the gate, all right, no matter what. So you could have actually taken 10,000 shares of this, and there was enough volume in it to do it. But if you had a small prop account, let's just say, for example, and I'm throwing numbers out there because they're all different. If you had $5,000 up in a prop account and they gave you 10-to-1 leverage, you'd have enough money to do this with a 5,000 base. And look what you would have done to your account in that time. You would have tripled your account in one trade. Risking $375, which is a lot to risk for a $5,000 account, but if you know what you're doing, not, and you didn't really on the ad, okay, the initial risk was there in the first trade of the 375. As soon as it went underway and broke, then you were clear and you could have actually lowered your stop. You actually could have lowered your stop. Jim is saying, where was the ad? Here. This is a reversal time. 10:45 is a reversal time. You cannot take ads unless you're at the right price and it's underway and it's not killing your thing and you still have room down to go with the target and you can lower your stop and it's at a number and a reversal time. You got to have a million things to do these ads, okay? But you can do them and I do them, and you have to have a combination of all the factors to do them. And even if you didn't do this here, look, I mean, this is like screaming at you, take me, take me, take me. I mean, even if you didn't do this here, you could have done it in here. It's a better price up here, but look, this was like waiting. This was salivating to just break. Boop. And remember, by the time you're in this, by the time this number's here, go to the daily chart. You're here. Where do you think it's going? It's going down. It has nowhere else to go but down. By the time that was basing here, it was screaming, take me, if you didn't take it before. I mean, even on the ad, it was already broke. Do you see what I'm saying? Even on the ad, it broke, it broke, it broke. Again, the numbers, knowing what to look for. It had already broken under 10. It broke under the low of the bar for the previous day. It broke under 985. It broke. It was underway. It rallied back up to try to save itself. It couldn't. Boom. Do it. Get in. Take it. Okay? You've got to do it. No hesitation. So the ad, though, worked really nicely with the market. Do I always take every ad with the market? Absolutely not. I don't, okay, because I trade my gaps on the own, but when you get the market with you, it does help give you conviction to do it aggressively. I will say that, okay, and also lowering the stop. So I want to use the example, though, of the baby trader, okay, the beginner trader, so that people understand that you don't need to risk $375 in order to make this trade work for you. You absolutely don't, okay? Same entry time as the initial trade, same risk, 15 cents. That's a great risk. Even if this thing had only gone $1, it had a risk to reward in it that made sense, okay? Would have been, you know, a little over 5. And that makes sense. If you were $75 on 500 shares, your profit would have been $12.50. You would still have made 16 times the risk to reward. You would have risked $75 to make over $12.50. And this is perfectly reasonable and very conservative and the right thing to do if you're new in a $5,000 account. And guess what? How much of the $5,000 prop account, if you had it and you had 50 BP, would you have risked? 5,000. Only 10%. 10% of the BP is all you would have risked. You only would have had to have 5,000 plus of buying power. And there's no one that shouldn't be trading if you can't do this. If you can't risk $75 on a trade, then you can't trade yet. Then you should be on a demo. Okay? You've got to be able to at least risk, you know, $50, $75 once you learn something. The difference is with the right skill set and knowledge, you can turn this into something else. And you don't need to do this every day, and you won't get this every day, but actually you'll get these a lot. In fact, I went over and I was working on my trading plan over the weekend. I actually counted from May 1st until Friday, which was the 21st. It was I think it was 37 or 39 days. I have to go back and look because there was a holiday in there with Memorial Day when there were trading days. There were 19 gaps that worked amazingly well that I did, and 4 that worked that I didn't even think were going to work. So that totals like 23 in the period of like 37 days or something. That stuff worked and great. That's a lot. That's huge. That's a lot. That's why I'm doing this strategy. That's why I'm teaching this class. I mean, I myself went back and looked at it myself because I'm thinking about being more aggressive now in the summer here. In the middle of the summer, I'm thinking about upping my risk. Why? Because it's earnings season in July, and it's the time to do this stuff, and it's the time that things move. Jim was saying, how did I determine what my target was? Let me answer that question before I go over this baby trader example here with the ad. The beginner trader guy here, he did the ad. If he would have lost in this ad, he still would have made $185. Okay, remember he risked 75. He still would have made 185 when he lowered his stop. If he doubled his price, now he's got or doubled his size, he has 1,000. He has 1,000, so he's cost averaging in. His cost now is 1022. He doubled it. And the total profit for him was $18.50. Risk to reward is 2467. BP needed was 10,000 plus. Again, this is very small. Going back here to the exit, Jim, the target, one of the targets was, there was a lot of targets in this, but the ultimate target, the dream target, was $8. That was $8. It didn't get there. How did you know it was going to flip? Did a double bottom right in here. Didn't break a new low. It's 2:30 in the afternoon. And by this time here, no matter what you're doing, you have to start managing your trades. This is, well, look at what happened here. This is what everybody did. They put their stop over this base, and that's why this bar went doot. You can tell. You can tell when you go back and look at this. Once again, reading the chart, reading what happened here. Did all of a sudden this get bought here at 3:10 in the afternoon after the stock just fell off the planet? No. It's a short covering that happened. Hard and fast up in one bar. Again, read the action, read what's happening. So if you didn't have a stop here, you'd be out right here. If you'd have to get out, okay? Why? Because this is, people are covering, and it's into the close, and it's, you know, it's late. Very, very late here. All right? Double bottom, not breaking, you know, 10, 20, 30 cents away from the target, $2 drop. Again, can't be greedy. Read the information, use it, follow these things down. The goal is not to get out at the squeezy last number. The goal is to trade well and to get the bulk of the move. That move could be, you know, 75%, 80%, 85%, 90%. You know, if I get out at the low, that doesn't really happen. I hardly ever do that. It's got to do something so like a flip or a double bottom or right at the number for me to get out. But that does tend to happen. Usually what happens is you lower the stop and then you're out. Okay? But when something does a double bottom, that's a sign. That's a sign that it's done. And if you're in something and you're up that much money, you have to be looking to get out. Okay? So the beginner trader here, going back to him, he only initially risked $75. He did the ad. If it would have taken him out, he would have still made $185. That's nothing to sneeze at since he only risked $150. At least he more than doubled his money. Of course, making this $18.50, you know, 24 times the amount would have been a lot better. Okay? And at this point now, he should feel safe in the trade. He's safe in the trade. He's safe in the trade. The safety is putting in the stop, and if he gets stopped out, he can't lose. There's safety in that. To do it correctly and have the conviction that no matter what, he's going to ride it down to the target or as close as he can get it into the next reversal time, or he's going to take it off. Okay? So the buying power required for gap trading is not as much as you think. Okay? It is not as much as you think. It's funny. It's interesting. I talked to so many different people. They want to do futures. They want to do this. They want to do Forex. They want to do all kinds of other things because they think that trading stocks is crazy, crazy, crazy expensive. It's not. It's actually not. I'm here to tell you it's not, okay? And the profitability that exists in trading stocks far exceeds anything else by flat out trading the market in equities. I'm sorry to say. If it didn't, I'd be doing something else because, you know, I like to make a lot of money. So this is real, all right? And it's a misnomer that you need all this kinds of crazy money and buying power to trade. You don't. You do have to have the right skill set, though, in order to take a small account and build it up. But if you're willing to do that and be committed, if you've got 10 years to be a millionaire, then do it, okay? Again, going back to the beginning, going back to the original thing, going back to what I was saying from the get-go, where's the commitment? The commitment has to be there. So I wanted to talk a little bit about the precious metals because this has just been such a great sector that has just continued ever since the call I made on it back in April in such a way that even I'm a little amazed how beautiful these things turned out. But then again, nothing much amazes me with gaps in the market because they are very powerful. They are very powerful. Stocks are very powerful. Stocks are powerful, and you get paid well in them because they're actually companies. They're companies that exist in the world, and they trade, and people work for these companies. Okay? Stuff happens and it makes them move. They're their own entities. You know, it's different from trading other things in other ways. Do you see why they're so profitable to trade? The very essence of them is these are real life companies with people working for them. And there's a lot going on there. And they're powerful when they move. Stuff happens in them when they get excited and they go long and they get bought, or when they get sold off, they move. There's momentum. That's how you're making money as a trader. I don't ever want to trade anything but stocks that are companies. In fact, I rarely even do the ADRs of the market. I don't do the market, even though I call trades in the market in the room. I really don't do it, because the best moves you're going to get in stuff is that in stock indices. But I will say that this metal sector, every one of these symbols that has any association with gold or silver, all of these things have just fallen off the planet. And I have traded some of these in these days in the move. They have paid. And the overall trade in this, actually the bigger trade that these things have given is the core trade. If you did any of the core trades in this, you're just rolling in it, okay? So what happened with this GDX? On 412, okay, GDX gapped down. The high of this bar here, okay, is 33.45. It didn't go over it. I forget if it was set right in the beginning of the day. I think it was, because it just ran. So then this is what happened here. This was on a Friday. The low of this bar here is 32.11. It did not break 32. It didn't take it long to do it then, and it did it immediately overnight. Overnight then, between Friday night and then Monday morning, everybody panicked and sold all of these things and created a gap down then on Monday. And it actually went red then on Monday. It was really one of these things that you almost see it and can't believe it's happening, but yet it is. So even after this thing, which this is very rare, by the way, for the stock to gap here and run and gap again and run, this is unbelievably rare. This is something that you rarely see, okay? And what does it tell you? It tells you weakness. It tells you just incredible weakness. So the day that this happened, when I saw this rare event in this and several of the symbols when they set up this way, I said they're never going to see the high of this bar again, because this is a rare event and it's very important and you have to take note. The interesting thing was that people still wanted to buy this in here, and people still wanted to buy this in here, and it really wasn't a buy, it was in a downtrend. So the day that this little red topping tail guy came up here, the high of this bar here was 31.27. This is on April 25th, just a week or so after the gap. It couldn't even get over here. I mean, it could not even get up to 32. And remember, the low of this bar was 32.11. Okay? So then he kind of sideways spaced, and here up a topping tail here. 5.9, topping tail couldn't get over 31. 30.96. Couldn't even get up to 31. Okay, so all in here you could be actually doing a swing trade in this thing. Every time it tries to go up and it can't go up and it can't go up, you're in. And you have the strategy you're playing though is the gap. Okay. But if you're not in it already from here, you know, you could be getting in here. So then it tries to do it again up in here. High here is 30.58, high here is 30.48. Can't get over it, drops off a cliff. Again, understand what's happening with the price, because if you look just at the candlestick, you have a green bar here and a green bar here. It appears to the naked eye that this stock is being bought, but this is not. Okay, this is actually trying to go higher and can't, and it's actually short people covering, because some people did cover. Some people were scared. They thought it was bottoming out. They thought the market was along. The stock gapped up here. They thought this was something to buy. It wasn't. It was up at the 50, whatever, okay? This is just short covering. So once again, understanding the flow of the price action is just as important as everything else besides the numbers. And then guess what? They gapped down again. I mean, they just gapped down again last week, and they fell, and they're even lower. And they're even lower today. And here's GLD. This is the same thing. Same scenario here. Bigger move overall, but again, not going to see the high of this bar. This was 412 as well. And the day this topping tail came up here, this was on 426, it ran up. The high of this is 143.42. And guess what the low of this bar is here? It's the same number. And people wanted to buy these. I mean, I hope you can see that this is actually not buying action. What is the flow of the price here? What is the flow going on? It's like a jerky movement. Jerky movement. And it drops. It's a jerky movement up. It's just a rally into resistance, and it drops off. And this gapped again too with all the rest. Okay? So the strategy is the gap. And this is how you know that all of this is real. To do it in any form. Every time it moves or trades lower, it's a short. The only play to ever do in here, any day, is a short. Okay? So advanced skills lead to more accuracy in how to read these things to take trades. Read your charts and read the stock symbols and read the indices. Accuracy leads to consistent profit. If you invest your time wisely in learning how to trade properly, it will pay off for you over time. It will. You have to learn something good, though, and then stick with it. Part of the investment is learning advanced skills from a trader who has developed specialized techniques, which I have, just simply doing it myself over the last 5 years. Achieving your goal as a full-time trader who has the freedom to work half a day or a few hours a day and make a lot of money is absolutely possible. And this is part of the dream in trading as well, because the idea of working for someone else 50, 60 hours a week is exhausting. All it takes is acquiring and learning the right skill set. Wealth in the market is possible through focus, discipline, and the right knowledge. And this is why taking a class to learn the knowledge is a powerful choice for you as a person, because you have more freedom as a trader than in a regular career. You just do, okay? You don't have to punch a clock. You can take a day off. You can go on a vacation. You don't have to set vacation days in a number of years. And you can make more money in the stock market than in a regular career. You just can. And even if you went to school and wanted to become a physician or a surgeon, you'd have to go to school and internship and do all of that, and that's 10, 12 years. That's 12 years. So if it took you 10 years to become a millionaire as a trader, or 12 years as a physician, plus then you've got all the debt because you have all the schooling as a doctor, either way, there's a commitment involved, and you can make more money than in a regular career unless you're going to be something like a doctor, you know? And even attorneys, you know, aren't making over $1 million unless they're partners in huge law firms in London and New York and places like that. It's just, you know, to even get to the point or the level of being able to make gobs and gobs of money in any career, the market has it there for you. There is a level of commitment involved in learning the right skill set, but it is certainly possible. Whereas in any other career, you're not going to have the freedom and you're not going to have the income potential. And really, when you realize all the wealth the market has to give, your life's going to change. All of a sudden, it's going to look like this. You're going to wake up in the morning, this is going to be what you see. And when you look out of your eyes and you see your life, this is what you're going to see. You're going to see the world. You're going to see every possible thing that you want that you could make happen and believe that you can. This is the difference. This is about seeing your life being able to make it something that you want, rather than being trapped in a career or a dead-end job or something that you hate. You know, when you start to see how the market can really, really pay you, your whole life is going to change. I know, because it's changed mine, and my life will never be the same again. And, you know, thank goodness that I kept with it. Thank goodness that I kept at it. Thank goodness that I taught myself this stuff, you know, because I did. But I'm saying this to you so you stay motivated and understand that it's possible. You just have to get to the point where you start to see things in a new way. Which is what? That the earning power in today's world is vital. This is more important than hoarding your money, okay? You have to risk money to make money in the market. You absolutely must. You must learn from someone, and unless they're going to teach you for free, you have to pay them for the information. There's more power in having earning power than in just having money. You think about what I'm saying here. This is 100% true. Because when you have the power to earn, you can take it and duplicate it 1,000, 1,000,000 times over for the rest of your life. And if you just have money, you're not going to be able to duplicate it. You may as well just have saying that you won the lottery, won 100,000, and what are you going to do after that? Okay? Because you're still young. You still got plenty of life left. What are you going to do after that? You're going to burn through that money quickly. You've got to know how to earn it. That earning power means something. And the role of time in your advancement is this. What? Waiting. The waiting. Wait as long as you want. Wait another year, wait 2 years, wait 3 years, wait 10 years. Wait as long as you want to try to do this and move forward and figure it out and learn this stuff. You're just putting off your future. You're just putting off to the point we're going to see this when you wake up in the morning. You know? I mean, to get to a point where you wake up in the morning, you love what you do, you know, it changes your life. It really changes your life. So the choice to learn the Golden Gap, which is the class that I teach, is yours. You can make your own path in life. You don't have to be on a set road. This is you. This is me. This is anyone. You're making your own path. You're picking up the rock from here and putting it down in front of you. Then you're turning it around and picking up that rock and you're moving forward. You're making your own path. You're doing it yourself. Just because I'm teaching you doesn't mean you're not doing it yourself. You are doing it yourself. Everyone in here is a powerful person and a powerful trader. Just because you sign up and take my class and learn from me, the information is yours and you still have to do it and take it and move forward. And you're creating your own path in your trading in life. You need a checklist and a system because there's too many things out there. And if you watch the TV and you listen to this and you're in this chat room and you talk to your friends and you're on CNBC and everything that's out there, you're going to get confused. You've got to have a checklist and a system that you stick with. So the class I teach, if you are interested, is called the Golden Gap course. The Golden Gap course teaches a 26-point rating system to find the best stock to trade each day. It's a gap system. And the course also teaches you how to play the stock, where the entries are and the targets. The course teaches you chart analysis and technical analysis on a very advanced level, which is how you're going to make money. It's a 2 full-day course on how to strategically find, pick, and play stocks that are professional bearish gaps, and I'll let people retake it after the first time as many times as they want for free, so you can learn the information. So why take the course? To learn a strategy that you can use to make money in the U.S. stock market, which is one of the most profitable markets out there because of the volatility that exists in the market for you to trade. To learn a strategy that offers momentum moves in stocks each day, and that's the great thing about playing companies and stocks. To learn how to trade gaps. To learn how to read charts with technical analysis. To learn a strategy that's profitable multiple time frames, just like I was showing you with the metals. Taking them as swing trades, taking them as core trades, doing them as day trades, like the examples. Any of them multiple time trades. The way you can do it, it all makes sense. It all fits together. It's the same strategy, the same concept, just taking it a longer term or shorter term. To learn how to read stock charts and price patterns, which really is so important. To learn how to pick which symbol to trade each day, which gives you a focus. Otherwise, you're going to be all over the place with the scanner looking. You've got to have a focus. And to learn how to enter the stock and determine the target. So the Golden Gap, get one solid strategy, which is what I do. And I think this is the key to really getting good at this stuff. One solid play, even though I teach several, it's key to have one that you like, that's your favorite. You know, for me, it's the swoosh. This is a play that I teach in the class. It's the reason I named my company the Stock Swoosh. It's actually a play that I created and invented in the market. And you need to start making money. I don't care if it's $75 or $2.50. If you're trading and you're not profitable, you've got to start making money. Something, anything, get green. This is how you're going to stick with it. Okay? You've got to feel good about yourself, good about what you're doing. You've got to become good at reading charts. Learn how to get conviction in your trading and the market as a source of wealth, because that is what the market is. I mean, the market is a source of wealth. Take a class and educate yourself to become a master trader. And not only that, believe in yourself. Okay? Believe in yourself. Believe that you can do it. So my class is a complete system to use to trade. All the pieces of the puzzle fit together. They're all there. There's not like one thing or two things. You've got to have it all. You've got to have it all. And in fact, so many people lately have told me that my class is actually a trading plan. I did not realize that when I made it, but they said that my class is a trading plan. So if you take my class and don't have a trading plan, my class is it. So improve your chart reading IQ. Take the Golden Gap course. The class is this weekend, June 29th and 30th from 9 a.m. to 5 p.m. Eastern Time. The cost is $19.99. If you're interested in more information, contact me at melissa@thestockswoosh.com. And I'm also offering a special combination with this class for this weekend. It's a course called Wealth Manifestation. So if you do the Gap class this weekend, you're going to get this class for free. It is a trading psychology class on how to manifest wealth in your trading in your life. And it's going to be July 2nd from 1 to 4. So the Gap class is this Saturday and Sunday all day from 9 to 5 Eastern. And then the Wealth class is right the next Tuesday, July 2nd from 1 to 4, and you get this free. And this is normally $3.99. So it's a great deal. And if you're interested, feel free to reach out to me. Remember, charts are the path to profit. Thank you so much. Does anyone have any questions? I'm going to write my email down in here. Anyone wants to reach out to me? Oop, it just went up there. Let me write it again. Kathy, maybe you can help me type it in the room there. Scott said I outdid myself with a presentation. I can come up for air. Scott, you know, I don't know if I ever come up from air. I come up for air when I sleep. When I fall on the bed at night and just conk out. Or lose my voice, whichever happens first. Which, you know, it depends. Thank you. You know, I was talking to some people in the room this morning. I was saying, gosh, you know, this industry needs positive people with a positive message that people can do it. I think what happens is when you start out as a trader, if you go down a bad path initially, which can happen to anyone, okay, you have a hard time then getting on the right path, you know. So how do you do that? You got to stay focused, and you got to stay positive, and you got to believe in yourself. Okay, you have to believe in yourself, and you have to believe in the market. Yes, I do Fortune Warrior. You can email me for that information. I can send that to you at the email there at melissa@thestockswoosh.com. Does anyone have any questions about the metals, the charts I looked at in the metals, the trade examples, what I was talking about the buying power you need to do these gaps, the risk to reward, anything in here that I was talking about today? Feel free to ask me questions. We have about 5 minutes here. Ended a little bit early. And again, you've got to make a decision that you are committed, that you actually want to do this to see something come out of it. You know, I'm not saying that you have to learn how to trade to become a millionaire. You know, some people just, you know, they don't necessarily need that. But I'm saying you could. And knowing that, whether you want to or not, the same focus needs to be there. All right. So whether your goal is to be a millionaire or not, this is the tricky part about the market. You still have to have the same focus. It's almost like the market won't let you in the door if your focus is like, I don't really need to make $1 million. I only may not make this much. So you're not that focused. No, you still have to be focused. You have to be focused just as much as if you were, you know, on the path to make $1 million. Sandy's asking me, why is gold dropping so much? The whys don't really matter. The fact is, it is. How do I know? Because I'm reading the gaps. I'm reading the gaps, and I'm reading the price. The price is telling me it's doing it. Therefore, I'm playing on it. Why it's doing it, it doesn't matter. People, just don't think about that. Don't get so caught up in the whys that you overthink yourself to the point of missing the price, you know, what's going on in the chart. Because the chart is telling you exactly what's happening, that it is lower, that it's been lower, and it is lower. And what happens is when people get so caught up in why is this happening, I don't understand it, it's got to bottom out of here, people, it's going to go back, you miss what's happening in the price. If you have an explanation that helps to solidify your bias with the price, great. If you don't, then drop it, because the price is going to tell you what to do with the trade. Chuck is saying one goal could be $5,000 or $10,000 per month to make as a trader. Yes, that could be a goal. That could be a goal. $10,000 a month is $120 a year. $5,000 a month is $60K a year. Depending on where you live, $60K a year can pay your bills. Okay? And certainly, as a new trader, you've got to recognize that you have to learn first. This is the other point that I'm trying to make here, that the learning, the skill, expertise required is really important. And the thing is, if you get to the point where you are making $5,000 a month, how long do you think it's going to take for you to start making 10? How long do you think it's going to start for you to make 15 and then 20? Do you understand what I'm saying? So baby step it up, because if you can make 2,500, you can make 5. If you can make 5 consistently, you can make 8. If you can make 8 consistently, you can make 12. Do you understand what I'm saying? This is what happens. So you've got to start from something, which is point A. Learn it, do it. Prove you can do it. Prove you can do the trades, do the ads right, take the right gaps, rate the gaps right, take the entries, and get the right risk to reward. Because the risk to reward is what it is, and that's how you're getting paid. And that's how you're going to say, wait a minute, I can risk $400 or $500 a day. And eventually, then what? 1,000. And you'll know, not a day, but a trade. And you'll know that if you can risk $400, for example, in one trade over the period of 6 months or 8 months or whatever, and you look back and say, wait a minute, this is crazy. I should be risking $1,000 in every trade. I should be risking $1,000 in every trade instead of $400 in every trade. And all of a sudden, then this is, do you see? So, I mean, risking $1,000 in a trade, okay, means that if a trade goes on to work at 24 times the amount, you're making 24 grand. And not just, not just in one trade. I mean, I just went back and added these up. I mean, there was 19 in the last 2 months. So, that's how to do it. That's where the money is. Okay. But the total amount you're risking per trade, whether it's 75 or 400, is about getting the risk to reward out of it. The risk to reward. And this is why gap trading and the stuff that I teach is so quality, because that is how you're going to do it. Could have the gap predicted the advance and the drop? Yes, exactly, Sandy, it did. It did. Let's go back and look at this really quick before Kevin says I'm done here. And Sandy, you can email me if you want more questions. I do have some videos of this on YouTube. I knew this was lower long before, but the bold statement I made the day that this happened here was I said they're never going to see that number again. And I mean, never means, you know, I don't know, in 200 years from now, but I mean, not for so long that there's no point even looking at the number. So if you read any of the gaps up in here, you could have gotten it, but this was the kicker. I mean, this one here was the break. This was the be-all, end-all for this thing, and if you knew how to rate the gap and read the gap and traded this gap and see the price and know how to read it on my rating system, read the gap, rated it with the 26 points, said this is a good one, this is real, this is it, you would have known that it was going to do all this and even more. And that's why I'm saying all the things I'm saying. And I'm saying it in Apple too, by the way. But I got to go now because I'm done. Thank you so much. If anyone would like more information, please feel free to email me at melissa@thestockswoosh.com. Thank you so much. Thank you so much for coming, everyone. Thank you for staying, everyone. Good group tonight. I know it's late. Have a wonderful, wonderful Monday evening. Relax. Have a good dinner. Have a great night and a great trading day tomorrow. And email me if you're interested in the class this weekend. Thank you.
Thank you so much, everyone. We do appreciate your time and your participation. Please take advantage of Melissa's offer. It says, yes, Sandy, the gap predicted the move lower. So you see the reply there. Again, thank you, everyone. It is now 6:31. We do want to thank each and every one of you for your time. Have a great day trading tomorrow. Bye for now. And again, thank you.